What's up, everyone, and welcome to the daily macro update for Thursday, February 5th. My name is Johnny Zerdy. We have a lot to cover today in the markets. Obviously, we're seeing a large sell off in huge names like Bitcoin. Bitcoin basically crashed today for the first time in a long time. And really, it's the first time where Wall Street is getting a little bit of a taste of what retail investors have been experiencing in crypto markets ever since 2009. With the onset of the ETFs over the past couple years. This is really the first time where institutions are having full-blown exposure to this crypto sell-off. So, it's kind of like that meme. I forget which one it was or which movie it is, but it's like James Franco at the gallows, and he looks over and he's like, "First time." That's like the retail investor looking at the Wall Street fund manager on this Bitcoin crash. But really, it's because of the onset fears of not a soft landing anymore, because we got some jobs data this morning that wasn't very good, which we'll go over here in a second, as well as kind of review the continued opportunities that we're seeing in some of the capital rotation, because there were some opportunities today, but my team and I like to do a wait and watch period once we have the volatility index of the S&P 500 above a certain level. So we're going to go ahead and get into all that here today. If this is your first time joining the live stream, welcome. For those of you who are on TikTok, if you want to see the screen that I'm sharing here, you have to go to our YouTube channel or go to our Instagram page. But welcome to Macro Optics. We take a data approach when it comes to the markets, where we look at the rate of change of different things, whether that's real macro data or the price charts, whichever, how they relate to each other, so that we can be strategically positioned for the medium to long term, right? This isn't really like a day trading channel at all, but it's really looking at the markets holistically, as well as you'll get a little bit of a flavor of how we apply our macro investing process, which is really a risk management tool, so that we can set ourselves up to, first and foremost, not lose money, but to then find the bullish trends in any type of market and own those. Pretty simple, right? Easier said than done. But this model has been helping me do this full time for a little over 6 years now. So I think it works. But of course, I don't claim to be any type of expert. I'm a regular investor just like you, who is fortunately able to take a little bit of a leap of faith with my team. And yeah, it's been working out ever since. So happy to share all my experiences with you as a full-time macro investor who has a little bit of privilege being on this side of the camera. But yeah, so let's go ahead and get right into it here. The macro data here for this morning was that the January job cuts number was the highest since 2009. Now, a lot of people were looking at the charts here and they were like, wait a second. When I look at this chart of job cuts, this isn't even higher than October of 2025. So what are they talking about? Well, what they mean is that when looking at January specifically, right? So looking at the month of January for any given year, this was the worst January since the great financial crisis, right? So it's comparing year over year rates of change in the month of January. And so if you go to the Challenger Gray and Christmas website, you can take a look at this in a little bit more detail. But as you can see here, this was a 118% increase in job cuts for the month of January compared to the previous year. It is a 205% increase from the 35,000 job cuts announced in December. So just month over month, it's a 205% increase, right? And so, interestingly, this wasn't driven by government layoffs or tech layoffs, which is what we've been seeing over the past, year or so, right? When characterized by the massive amount of layoffs from last year, it was mostly driven by federal government jobs, as well as the big tech sector. But this report was very interesting because it was led by the transportation sector. And typically, the transportation sector is a leading economic indicator, right? So when we look at heavy truck sales, or when we take a look at shipping, right? That's a key indicator of demand and typically an early warning sign of the aggregate economy. And so that's why a lot of people were pretty surprised with this report being led by the transportation sector. So that was really the big shocker here this morning. Um, and so interestingly, when taking a look at the target rate probabilities for the rate cut or target rate probabilities for a rate cut for the March meeting, it's still well favoring a pause, a continued pause in rates. But that went from a 90% chance down to a 77% chance, right? So this is more of, when you just read in between the lines there, that is more of a type of economic scare, right? So this is more of a fear type of signal, right? And you don't have to just take a look at the futures market. You can look at really any market today, mainly with the cryptocurrency markets. Man, look at that. Pretty red. Bitcoin having a massive, and it continues, almost a 15% drawdown. If we take a look at a price of Bitcoin here versus the dollar, you can see that this is in full blown crash mode. So, for those of you who are new to Bitcoin, welcome to your first crash. But this is really the type of volatility that has been showcased by this asset since its birth back in 2009. And someone in our community, interestingly, was asking the question, um, how does this compare to previous cycles? And I had to think about it for a little bit, but really, this is the first time where you have a lot of institutional exposure to this drawdown. And so, even though we are $40,000 higher in price compared to the 2022 bear market, this because of the market participants is a much bigger deal. Does that make sense? Put a one in the chat if that makes sense. So yeah, being at 62,000, it could go lower. Not really going to speculate too much on how low, but when taking a look at, some of these large chunks of liquidity here, this is anywhere between, 60 to 40,000. I'm not saying it's going to go down to 40,000, but that's really kind of the range that you see a lot of liquidity over the past post-pandemic years, right? Going all the way back to 2021. At some point, this will bounce, though. Typically, when Bitcoin does something like this, it does bounce aggressively. And really, statistically, when looking at bear markets, when you get the largest bounces, well, those happen in bear markets, right? So, yeah, I mean, that's really what we're seeing there. Our model was able to help get us out of this, though. And I'm not sure if you guys follow me on Twitter at all, but I did put out a tweet all the way back on January 21st, saying that because I did say that this was bullish or our model did say, not me, our model did say that this was bullish on January 6th, where it went from 92K up to 97K. And then from there, it flipped right back down into bearish trend. And so when this bearish trend happened in our model, that was a sign, and this is a strict rule in our process. Whenever something goes bearish trend, just get rid of it. Don't hold on to it because you don't know if it's going to go from bad to worse. And if it doesn't, then you can just get right back into it and buy back. Okay. And a lot of people, they think like, hey, this is a big drop. They don't know the context in which that drop happens. Because if you're paying attention to that day on January 21st, when Bitcoin had that large, I think it was like a 4 or 5% move down, that was on higher volume and higher volatility. And when that happens, that's a red flag. And so that's why the model, the model that we use, that's why on that day, on January 21st, it flipped back to bearish trend, even though it was just bullish like, a week before, right? But when those signals happen, you have to execute properly, or else you're going to bag hold. All right. And so this is why macroeconomics comes super in handy in this post-pandemic environment, because when you have these types of signals, it can really help you stay out of trouble, right? It doesn't matter if you make $100,000 in gains. If you give that $100,000 back in the form of losses a few months later, then what's the point, right? So you have to know how to lock in profits. You have to have a process so that you can continue to iterate higher and higher in your portfolio, or else you're just going to lose all the time. And that's not what you want to do, obviously, right? Now, if you're part of a community where you are getting those types of signals, you're learning macro, you're learning a process that you can repeat time and time again. And although it's not completely going to help you avoid all losses, when you do take a loss, it's very small, and all the gains that you make will make up for all the losses anyway. If you already have a group like that, stay in there. That's great. Welcome to the channel, though. If you do not have a group like that and you're looking to actually formulate a process so that you can repeat it, as well as be a part of a community that's doing it alongside you, then I would highly recommend going to our website, macro-optics.com, and taking a look at our 2 tiers. Just click on Start Now. We have this one called Macro Vision, which is a weekly newsletter. It's a good way to get your foot in the door. We have a 7-day free trial, and then after that, it's $49 a month. Or you can save 15% with the annual plan for $500. You can read the different things that you get in there. Or if you'd like more of a proactive approach where myself and my team, we actually trade alongside you, and you can be a part of our 6-week macro mastery challenge where you get the full deep dive into our process so that you can, repeat it over time. And you can read more about that on there as well. There's a small deposit just to keep you accountable, but it is for free if you have the willingness to complete it. So go ahead and check that out there on our website. We have some other cool stuff too. But yeah, that's all I will shill. You'll never hear me shill any type of stock or crypto on here, just the stuff that we back ourselves and that we put our reputation on the line for. And so, getting back into the markets here, we can see that across the board on this stock heat map, which TradingView does a really good job. I think they just released this a couple weeks ago, but I'm really loving all the stuff coming out of TradingView right now. But they have this really cool heat map feature where you can pretty much see everything, not by market cap, by just kind of every single sector, and you can see it's pretty much red, right? But let's actually go to the S&P 500 version of this. Now, this is on a 1-day change. If you go to the 1-week change, it starts to look a little bit different, right? Because the day-to-day is always going to change pretty frequently. But if you zoom out on different time horizons, you can see more of what the trends are and where the opportunities lie. And just going out on a 1-week performance basis, now you can see how we're getting a little bit more color. Whereas in the tech sector, that remains pretty much red, but where is it more green? Energy, consumer staples, some communications, transportation. How about we go back on a month? Oh wow, that's way more clear of a picture. Big tech still red. Energy, consumer, producer manufacturing, communications, durables, materials, all of which are doing pretty well right now. And so, because people are so distracted by Bitcoin and 7 mega cap stocks, they're completely missing the bull markets that are happening in other sectors of the S&P 500. And this is all based off of the capital rotation that's happening right now. It's not that every single market is bearish. And so you have to expand your and I know I'm not talking to everybody. I know that some of you do a really good job with paying attention to the broader economy, and you're probably invested within a lot of these. So I'm preaching to the choir for some of you, but there's a lot of people who just stick to those things and they're getting sloshed around by the news all the time, and it's very stressful. That's not what we want for you. And that's not what you want for yourself, right? So we continue to see this capital rotation, but with the volatility index of the S&P 500, breaking through this 20 level here, this is more of a wait and watch on dips to buy, right? We still want to pay attention to which assets are actually holding up in this dip type of environment, but this is turning into more of a trading environment now, right? So you have to be a little bit more quicker on the trigger. If something goes up one day, you want to sell the majority of that, where it's not just like a buy and hold type of scenario anymore, if that makes sense, right? But yeah, so we're just continuing to see this capital rotation, and yeah, I think that the labor market deterioration could be worsening here, but um, it's really just disrupting that soft landing narrative that the Fed keeps promising the markets. Now, this is just a 1 day data point. We still have to see multiple data points come in to confirm this is happening in the labor market, because right now we're still in that period of low hiring, low firing. It's kind of like a labor market freeze, and if the market continues to see that freeze, then that's actually a positive rate of change compared to the deterioration that was going on. And so, yeah, we need to see more labor market data, which will come out next Wednesday, right? Because we had the government shutdown and then it reopened and it pushed a lot of that data that was supposed to be coming out tomorrow, but is actually going to come out next Wednesday at 8:30 in the morning. So we still have a little bit more data to come through, but as you can see, I mean, just zooming out on volatility, this is having a clear bullish breakout. And so when that happens, you don't want to be super quick to like go out and buy every single dip that you see, because you're more than likely catching a falling knife there. Okay. Now, where is volatility falling then? Right? If you want to wait and watch when volatility is rising, where's volatility falling? Take a look at gold. Gold volatility is finally coming back down. And so that had a little bit of a dip today. I was buying a little bit of gold, right? So that had a little bit of a buying opportunity. There are some other things. Interesting seeing some positive trends with agriculture, mainly with soybeans. Look at this breakout here in soybeans. Pretty interesting there. Soybeans is now bullish trend with the ETF SOYB. When we take a look at the Mag 7 stocks, really there's only a handful now that are in bullish trend. I was buying a little bit of Meta, even though that's technically against the process. Need to wait and watch. Walmart still at the top end of the trading range. Great time to sell some. Hopefully, you guys were owning some Walmart there. Google opened up down, but had a huge acceleration today. So if you guys were buying at the depths of the day today, then you're probably up big on Google, and that maintains its bullish trend. And then everything else kind of fell off. Amazon is now bearish trend. Microsoft's bearish. Excuse me. Tesla's bearish. JP Morgan, I'd probably put that as neutral to slash bearish. Nvidia is bearish. Berkshire, bullish. I just changed these. Why did they change back? Apple is bullish. Broadcom is bearish. Hopefully that'll save this time. And then, yeah, really out of all the sectors, industrials are bullish. Staples are bullish. Energy is bullish. And where's materials? Materials is bullish. So there are bullish trends. And these are the ones that I was talking about. And we've been covering these pretty much over the past couple weeks. So, yeah, I mean, ever since even we started covering this, yeah, materials is up 11%. So while the market has been folding over, there has been plenty of opportunities here. All right. Interesting bounce in the dollar. This might go back to a neutral trend here. Crazy bounce in the dollar. This thing's whipping around. Currency moves like that are pretty big, given the size and magnitude of the currency markets. So that's interesting to see that there. Huge drop in 10-year or long end bond yields, which is suggesting this was more of like a fearful type of day, right? This was a hard landing, kind of hard landing fear type of day, right? Let's see, what else do we got here? Yield curve continues to steepen. So that steepening is continuing to happen. Interesting seeing the drop in the 2-year though. So this changed from a bear steepening to a bull steepening twist, which typically when you have a bull steepening twist, let me just go ahead and zoom in here. Typically when you have a bull steepening twist, this is where you have accelerating growth as well as inflation rebounding, aggressive fiscal stimulus, which is true, right? The government is printing a lot of treasury bills, and the Fed is buying those up. Uh, let's see. Fed policy, fiscal dominance, cutting due to politics. Yep. US dollar is falling, devaluation fears. Yep. Small caps, financials, industrials, cyclicals, gold. We're seeing that. Financials, not so much though. Long term treasuries, cash, defensives, and we can include uh, growth stocks are all doing poorly. So the bull steepening twist is back. It keeps on flipping between bull steepening twist and bear steepening twist, which means that the market is very fragile right now, you know? So got to be careful. Let's take a look at some of the different headlines that I'm seeing too today. We had a couple of Federal Reserve governors, give some of their um, commentary here. One of which was Fed Governor Cook saying that the rate policy is mildly restrictive, and this is the right time to wait and see what happens. R star, not a short term concept, so not as relevant. That is a little bit more of a hawkish comment. The Atlanta Fed's Bostic says we should let the economy run for a little while before considering cutting more rates. So that obviously did not help, right? If you're getting the economy weakening and the Fed's not cutting, man, that's a recipe for what we're seeing today in the markets. Yeah, so that's pretty much what I was seeing with like the major headlines, other than the one that we covered today, which was that the Challenger job cuts reached a new high. You know, but yeah, that's pretty much all I have for you guys here today on the show. We can go ahead and take a look at some of the comments here on the social platforms, and then we can go ahead and wrap it up. I try and keep it to like 30 minutes as best as I can. All right, let's take a look at some of the comments here. Okay. Yesterday you said you didn't think the silver bounce was a dead cat bounce, but it was. Yeah. I mean, that's what I said yesterday. So, I'm not here to try and predict things in the short term like that. A lot of our model is like the medium to long term. So, um, yesterday in our model, silver was bullish. Now it's back to bearish trend. So, yeah. But the thing about the process was that, was I buying here on this bounce? No. This bounce was on lower volume, higher volatility. So if you were chasing this, that was the wrong move. It was basically just, wait and watch. In our model, things can fluctuate before finally choosing something. But yeah. So if you're trying to watch this channel for, short-term predictions like that, then you're probably going to be disappointed because yeah, I just was telling you what our model was saying yesterday, and now it's saying something different. Hey, Johnny, I know it keeps changing these days, but would you say silver is still bullish? No, it is not. Back to bearish trend. I took a loss on Robinhood at 91 and also took a W on Powell. Okay. Thanks for your Thanks to your process. Oh, okay, great. Yeah, Robinhood. Let's see. Yeah, Robinhood has been in bearish trend pretty much since. Let's see. One second here. Yeah, so Robinhood has been in bearish trend, pretty much since like around this like mid-November area. So yeah, I mean if you were buying Robinhood in this area, that really was not the right time to do it at all. So next time when you come on these lives, the Manny himself, ask me. All right. Now I can't tell you to buy or sell it because that would be direct financial advice, but if you ask me what's bullish or bearish, I can tell you if it's bullish or bearish, and then I can tell you in our model what we do with that knowledge of something being bullish or bearish. BIDU, GEV. I don't know what those are. Baidu. I don't know what this company is. Looks like it's making some crazy moves. $48 billion market cap. Okay. Hmm. It's at the low of the trading range right now on accelerating volume. I probably wouldn't buy it here just because volume has been accelerating on this price drop. It wasn't a huge acceleration though, but we'll keep this on the list. Yeah, I'll keep it on the list there. GEV. This is something that's in bullish trend. Yeah. Sven asks, how come the yields are coming down fast suddenly? Well, I mean, they've been going up a lot, right? So when you take a look at let's just go with the 20-year. I mean, these things just don't go up in a straight line, right? So a lot of the times, what do we say? Things go down after they go up a lot. But on this particular day, this is more of a fear signal. Hey, Johnny, I've added to my copper and XLB today. Are those dips near the low of the trading range? Let's see. Copper. Copper is getting close to the low of the trading range, but not yet near there. But still, decent add. We'll see what happens from here. Looks like it could be weakening, though. This was on some higher volume. So I probably wouldn't have been adding it today, but still is bullish trend. We'll see what happens with it. Not my first choice. And then XLB is right on the middle of the range. So I mean, yeah, this was probably a good add here today for XLB, even though it was on accelerating volume. I'd like to see volume come down. Maybe you have a couple more red days below the midpoint on decelerating volume. I would be much more comfortable with pulling the trigger on that. Right. Okay, let's see. Is the labor market still having supply issues? Yeah. A lot of people are focusing on the labor market having demand issues, but it's actually having supply issue. The big longer term trend in the United States is that the population growth is shrinking because over the past, probably 5 to 10 years, the native population rate, the birth rate in the United States has been coming down, right? Pretty much ever since 2008. And so they've been having to make up for that with immigration and open border policies and things like that, right? So the foreign population has been having to make up for the decline in native population growth. But now that the borders are closed, then you're actually just seeing what the native population growth actually is for, the past, almost decade now, or more than that, actually. So this is really what has been the entire time, but we're masking it with the immigration pill. So yeah, not necessarily great if your entire population growth is based off of having open border policy. I think that, I mean, I'm not a politician, but just like with your health, like you would want to solve the underlying issue, right? You don't want to just keep taking pills because once you get off the medication, then you're left still with your sickness. So to me, what would be better is to um, actually fix the native population decline, maybe make it so people can afford things in this country. I don't know, but I'm not a politician though, and this is not a political channel. But anyway, what's the trading range for IWM? It's near the low of the trading range. Volume is coming a little bit down, but yeah, Russell looking like a good buying opportunity to me. Let's take a look at Russell volatility, though, RVX. RVX has been accelerating, so I'd rather see I'd rather see IWM volume coming down more, as well as uh, RVX also coming down. Would you preference IWM or IWN? Our team preferences IWN because it is a better trend, and um, value is doing better than growth right now. So you're getting both, best of both worlds with small cap value, right? Good question. Good question. Let's go over to the Instagram comments here, and then we'll go to the TikTokers. Credit spreads remain pretty narrow still, historically. Silver's bearish. The narrative felt like it flipped suddenly with Warsh and Silver. Yeah, I mean, a lot of people are betting that Warsh will be hawkish, but my team and I don't think so. Where do you see NQ support? Well, it's bearish, so I'm not even looking at this to buy. I'm not really concerned on where it's going to find support. Are you bullish on gold? Yes. You mentioned holding or purchasing some NVIDIA earlier this week. It seems bearish. Yeah, I mean, with NVIDIA, I went back to bearish trend. So when that happens, you just cut it. So yeah, on the move on Monday, or I'm sorry, on Tuesday, that's where you were supposed to cut it. Thoughts on Hyperliquid? Staying away from crypto, staying away from all crypto right now. I don't care if you have the one outlier. Don't they move the same IWN and IWN? No, they do not. Aaron just dropped IWN. Are you sure? Oh yeah, you're right. He did remove IWN today, actually. So yeah, you're right. But it still is a better trend than small caps. I mean, I don't know if I would get rid of it personally, you know, um, but yeah. So I still think it's a good buy. What's the difference on them, please? Well, one of them is just regular small cap Russell 2000 exposure, and then the other one is value. Right, so it's mainly focused on the value stocks within the Russell, right? Okay, let's see. Do you think the market will bleed more? I don't know. It could. Is there a rotation out of HYG? Yeah, I mean it has been weakening, so possibly. When are you? What are you buying into right now? You'll have to be a member for you to get that information. The bookcase has been green this whole time. I feel betrayed. Why? You should know that the bookcase is green because the SPY remains in bullish trend. Although after today, let's see. Yep, I think after today, the SPY might have to finally go into neutral zone. So, yeah, with the VIX closing above 20, I think it's time. I think it's time to change the color of the bookcase to yellow. Might actually wait a second. How do I? There you go. It might actually go bearish. I'll have to see what Aaron sees in the model after tomorrow. But yeah, we're talking about the S&P 500 here. That's what the book case colors represent. But I feel for you. I know. I don't typically own the SPY. The bookcase is your magic conch shell. I only do what it tells me to do. That's funny. Who is Aaron? Oh, come on. Aaron is my research partner. He's one of them. If you go to our website and go to About Us, you can read about us three. Look at these three gentlemen right here. Aaron, this guy right here, he's in the middle. That's who I'm referring to. And then we also have his father, Mark, who's been a very important senior contributor to this process. Um, but yeah, he's a licensed CFA who has pretty extensive experience being in his own wealth management firm for decades. So he has been pivotal to developing this process, and I've kind of just been the guinea pig, really. You know, out of the three of us, I'm the dumb one, which I'm sure you guys already know that at this point. Just kidding. Just kidding. Self love, right? Self love. But no, I mean we do a pretty good job with this process. But if you guys want to learn more about us, you can just go on our website there. I thought the community was $15 a month. Well, we kind of restructured our offerings here, and yeah, so instead of that, we've added a couple more things and changed the pricing. So if you can't do 49 bucks a month or you can't do the challenge, then just stick with the free stuff for now. All right. Well, with that, ladies and gentlemen, we're going to go ahead and wrap it up there. I appreciate everyone for joining. And today is Thursday. So we only do these live streams Monday through Thursday. Fridays, we take off. And then I will be back on Sundays, every Sunday at 8 p.m. Eastern Time. We do our Sunday macro wrap up. But is it the Super Bowl this Sunday? I don't even know. I don't even pay attention to this stuff. Let's see. Super Bowl. Okay, that's Sunday at 6:30 p.m. So, I mean, I don't. What is? Does everyone watch the Super Bowl? The cat isn't listed as partners. I should probably put Remy on there, shouldn't I? He definitely helps. That's for sure. Um, who do you guys got for the Super Bowl? I don't watch this stuff at all, so even though I don't watch football, I normally get pretty good placement in our friends' fantasy football league because it's all based on luck. But yeah, who knows? Maybe since the Patriots no longer have Tom Brady or Bill Belichick, maybe that's tolerable now. So we'll see. I think a lot of people are rooting for Seattle, though. We'll see. Well, since that's going to be going on, I don't know. How long does the Super Bowl typically run for? Like a few hours? I'm just going to have it anyway. I mean, people can watch the recording. But all right, well, we're going to go ahead and wrap it up there, everyone. I appreciate everyone for joining. Have a great rest of your weekend, and we will catch you back here on Sunday's Sunday macro wrap up. Bye, everyone.